The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to this webinar, Binary Options and Knockouts. Interesting day in the markets. So, yeah, the markets have been pretty volatile. So today's session might be a little entertaining as we go through it. Um, I just before I get going, if anyone's having any technical difficulties, you can often resolve them by refreshing your browser. If you can hear me and everything's coming through, just in your little questions box there, just say, hey, it's all good. It's always nice to do a little test out there to make sure everyone is receiving me well, because this is delivered over the internet, and the internet is not always 100% reliable. So, all right, thank you, everyone. Let's get going with today's session. My name is Todd Rich. I am the head of education here at Nadex. And I do want to let you know that today's session is very interactive. You've all found that little question box down there. I've got my colleague Sophia in the background. So as I go through today's session, please engage with her. You can chat with her. You can send her questions if it's about something that I'm discussing, if it's about the platform, if it's a question, whatever it is. Please keep her busy in the background. Sophia's back there to help you. And I definitely want you to take advantage of the fact that she's back there in the background. So before I get going, I do need to do a quick housekeeping item. From our compliance department, and trading does involve risk, and all of that risk is the responsibility of you. So you really need to consider what kind of capital you're putting into the markets. That is risk capital. And so just want to give you a chance to read this page. And if this is probably the most important part, I am going to be doing some live sessions here where you're going to see real markets, real prices. I am going to be doing a demonstration. I don't want you to take anything I say today as a buy or sell recommendation. This is strictly for your educational purposes. So that's really important. And I will, not only will I be going through the basics of the products, you know what? In fact, here, after we've covered this, I do want to give you the quick little agenda. I'm going to do some basics of the products. I'm going to do quick definition of binary options and go through some examples, again, in the real markets. I'm going to do the same thing for knockouts. And I want you to take a look at what we've got in knockouts, and I will be using the new platform. I know everyone's concerned. Everyone's got some interest in this new platform. And what I can tell you, the biggest benefits of the new platform, number one, it's much faster. It is way faster. Your loading times are faster. You're going to be able to interact with the markets much more quickly. The second thing is it's a little cleaner, simpler, and easier to use. Once you get used to it, the design, the look, the feel of it is much cleaner. But then one of the biggest benefits, and I will definitely show you this, is the charting functionality. We've really enhanced our charting functionality, and I will be showing you some of that as well. Before I jump over to the platform, just as I mentioned, Sophia's in the background. Type questions into her. Please engage with her as we go. But I also want you to know that we're here to help you. Please, you have any questions, call us, email us. There's our phone number. There's our and I'm even going to show you on our website where we have that, so that you can always, we're here to help you. We are very accessible. We even have chat functionality. I'll show you that as well. But I just want you to know we're here to help. And the best way that we can help you is if you're having a challenge or a question or concern, please reach out to us. All right, I am going to jump over to the, oh, you know what? By the way, this is being recorded. Okay, it will be available on our website. It will also be on our YouTube channel. So I put our YouTube channel up here. I find that you might want to subscribe to our YouTube channel. We do post. We did a virtual education summit. It's an 8 session basics to more advanced. I'd encourage you, if you haven't seen it, take a look, and you might find something interesting in there. We even do daily market updates. Our COO, Travis McGee, every morning does a quick little update on what's going on in the markets, what happened overnight, what you might want to be looking for. And once a week, our partner, Brian Caprice from Keep Trading Simple, does a full hour session on Nadex markets and potential ideas for thoughts about entry and exit levels in all of our different markets. So I would encourage you, again, go to our YouTube channel, subscribe to it. But as I mentioned, you will also find everything on our new shiny website. If you haven't seen our new website, we're pretty proud of it. It is very clean. It's a nice, pretty, refreshed look. Um, so hopefully you like our new site. We will be building out additional content in our learning section. But I do want to show you under webinars. I would encourage you to take a look. This is the session we're running right now, but upcoming webinars, we've got them in there. We usually keep them out a few weeks, but we do record everything, and it's available in the archive. Okay, and you'll even find recordings to that entire education summit there. And I am going to put a teaser. We're going to be doing a much larger summer education summit in a couple, I think at the end of August. So you'll have to keep your eyes peeled for that. So let's go ahead and have some fun. I'm going to log in. Okay, I'm going to log in. And when I click login, here's our new login page. And I'm actually even going to do this so that we can make it bigger and better for you to see. The other thing I would encourage you to right now is on your go-to webinar control panel, there is a little button that you can make it full screen right above the raising your hand button. If you make it full screen, you'll be able to maybe see a lot better exactly what I'm doing. So I do like to encourage people to do that. As I mentioned, we have this new platform. Now, if you log in on the right-hand side of the page, you'll be taken to the older platform. That is going to change. We're going to start pushing people into the new platform. You will still be able to access the old platform. We aren't taking that away for several months. But we want to give people time to start using the new platform and accommodate and get acclimated to it. I am clicking login on the left-hand side to go to the new platform. Now, I am in a demo environment. If you do not have a demo account, I'm going to point it out here in the upper right-hand corner. It says demo. When you're in a live account, it'll say live, and you'll be actually trading your live account. Now, the difference between demo and live, most of the prices in the demo environment are the ones in our live environment. So it is live prices, but it's not perfect because it is a demo environment, and your interaction with the markets will be different. If I put a bid or an offer in between the bid-ask spread in demo, I don't know who else is looking at it and whether it'll execute or not. In a live environment with a lot of different eyeballs in there and a lot of different market participants, your experience with the markets will be a little different. Notice it also tells me I can open the old platform. I'm not going to, but we aren't taking that away entirely yet. Now, let's get into binary options and knockouts, and I'm going to be doing it on the platform. So again, Sophia's in the background. Please ask her questions as I go. If I do something too quickly or you need further clarification about anything. So let's start with binary options. When you come into the new platform, you'll notice on the left-hand side of the screen, we've got our products. At the bottom is where your orders and positions and history will be located. And then right now, my workspace is empty because I haven't clicked on anything yet. That will populate with my chart and order tickets when I click on a product. Now, with binary options, what are binary options? I said I was going to define them, and then I'm going to show you some examples. Let's go ahead and in binary options, and in fact, I will go through a full 5-minute one. The durations, we have very short, great price action. In the 5-minute binaries, they're all in our foreign exchange products. And I am going to go through a whole 5-minute example in a bit because I think it really drives home the concept of binary options. In 20 minutes, we have them in our indexes. Now, if you look at the names of these indexes, you haven't seen them before, the US Tech 100, that is the NASDAQ 100. It does settle against the NASDAQ 100 future. The US 500 is the S&P 500. The small cap 2000, that is the Russell 2000. And then the Wall Street 30 is the Dow Jones Industrial Average, the Dow Jones 30. We have those in 20 minutes. And then we have more indices, all those indices plus some other indices around the globe, but those will be hourly expirations, daily expirations, or even weekly expirations. Foreign exchange, event contracts like non-farm payrolls, jobless claims, things of that nature, unemployment reports. I'm going to go ahead and click on commodities for binaries right now, and you can see the different binary products. And gold has been pretty hot as of late. You'll notice when I open up the different binary option products that we have, there are the different windows. Here's a gold that ends at 1 p.m. today. Here's the daily one, which is 30 minutes later. We do have daily ones because crude oil, for instance, closes at 2, so that one will actually the daily one actually is at 2:30. So you've got different windows of opportunity for your binaries and crude. I'm going to click on a weekly, and it does tell you when it expires. Now today's Thursday, so this gold will settle tomorrow, 1 day and 1 hour from now. When I click on weekly, it does open up all the different binary options that I've got for gold. I am going to go ahead and click on one, and I'm picking one where the price here, they're around 35, and I'm going to explain that in a second. But when I click on that, it does bring up a chart. I am now going to hide that. I am actually going to also hide my orders section so that I can make this chart nice and large so that you can see what I've got. Now, this is a chart of gold. What is this chart of? I can actually look up here and I can say that I just want a 1-day chart. Let's make it a 1-day chart because that tends to be what people look at when they're looking at binary options because they're shorter termed. And this is a 15-minute chart, which is fine. That'll suffice. I am going to go through some of these other chart functions later, specifically around indicators and drawings. I just wanted to bring up a chart. I'm going to get into that other stuff later. Now, what are binary options? Binary options are exactly a proposition. They are a proposition that could have only one of two outcomes. That's why it's binary. Will this product, and this happens to be gold, finish higher than a certain level in the time frame that I chose? All right, that's what it is. In fact, I'm going to go ahead and click on one of these right now. Okay. It's either a yes or no question. Did it finish higher? Yes or no? And if it is true, if it settles, so in 1 day and 1 hour, if gold, which is currently trading at 1805.60, you can see it on the chart here as well, the indicative price, if it settles higher than 1810.50, this will be true and the contract will settle at 100. So, and each contract, that 100 is $100. If it's false and it does not finish higher, this contract will settle at 0. So that is a binary option. It is yes or no, true or false, and it's either 0 or 100 at settlement. Every one of our binaries, they will either be worth 0 or 100 when it settles. Now, what are you actually trading? What are the prices that you're looking at here? And the price is the probability that at this moment in time, this is what the market thinks the probability of this being true is. Right now, people, if I went right between, what is this, 28 and 34, that's around 31. There's a 31% chance that in 1 day and 1 hour, gold will settle higher than 1810.50. Now, if it was going to happen, I'm looking at a 1 day chart of gold and a 15-minute chart. And if I see, okay, yes, gold sold off today. And if I thought maybe later today or sometime tomorrow, gold were going to rally and stay above 1810 and settle above 1810. It could be at 1810.01, this contract would go to 100. If I thought that were the case, I'm going to click buy. And notice when I click buy, it made this blue area on the chart is where gold would have to settle for this to be worth 100. Now I'm just not a buy or sell recommendation. I think that's a possibility. I think I'm going to put an order between the markets because 31, that's kind of what I was calculating it out right in the middle. And it tells me right away, if I bought one of these for 31, I would be risking $31. The worst case scenario, I bought this, gold does not settle higher than 1810.50, and this would go to zero, and I would lose my $31. If, however, it settled above 1810.50, 1810.51, it would go to 100, and I would make $69. So I'm risking 31 to potentially make 69. I am going to go ahead. This is a demo environment, remember. I'm going to place the order. And if we go down to it tells me that my order was received. Wow, the market's changed quite a bit right there. Did it just pop? And we'll see that my order is actually in there. Remember, this is a demo environment, okay? And something just changed. And so I've got my order right now to pay 31. Okay, I am going to do this. I just refresh my browser real quickly. I'm going to go back in there to that commodity. I'm going to, oh, you know what? I can go down to my order section and I can click on it and it will bring it back up. Okay, I'm going to hide this again. And let's just make sure I want a 1 day chart. And you know what? Let's make it 10 minutes. Why not? And I'm going to open it up. Yeah, I mean, right when that happened, gold popped a little bit, didn't it? Okay, so that is a binary option. Okay, I wanted to. I'm making a prediction. I'm risking 31 to potentially make 69. If I thought, however, this was going to be false, okay, I don't think it's going to be true, and I am frozen. So you know what? I am going to, my internet connection's down. Let's try this again. And you know what? I might actually go to a live environment so that, let's see what's going on. I'm going to do this. I am going to log out. Okay, let's go to a live environment. Oh wait, let's log in. Whoops, that's not the right account. There we go. Oh, that's not one either. I got to find my right demo account. Right, maybe, let's try going back into the demo again. And let's see if I get unfrozen. Let's look at my orders. Let's bring this ticket back up. There we go. I'm clicking again. I'm not sure what happened. My internet, it's not totally reliable. A challenge sometimes when you're doing these. Okay. So 1 day, let's go back to 10 minutes. And I'm going to do this. Now, we can see this is actually moved around. It's moving around a little bit. So, and by the way, I apologize for that. That was just my internet connection. That can happen. Um, let's make this also bigger so that we can see this again. There we go. Hey, we're right back where we began. Okay, now this was a buy. I thought it was going to go higher, so I placed a bid below. Let's say I change my mind. You know what? I don't like that. So I'm actually going to go ahead and cancel that order, and I'm going to go ahead and delete it. And let's say, for instance, I thought, you know what? It's not. I changing my mind. It's not going to go above 1810.50. It's going to stay below. I could choose to sell one instead. Notice when I click sell, now it's going to highlight my chart in red, where gold would have to settle for this contract to go to zero. All right. Now, if I'm selling it, that's what I want it to do. So I'm going to go ahead and put an order in here at 34, a little bit above. Now, if I sold one at 34, that is the most I can make. I sell it. I do not want it to settle above 1810.50. I want it to go to zero, and I would collect my $34. However, my risk, if gold were to rally and settle above 1810.50, the contract would go to 100 and I could potentially lose $66. So I'm risking 30, I'm risking 66 to potentially make 34. When I place my order, there's my order in the market. I want to sell one at 34, and we can actually see my order down here. And if it trades and I sell one at 34, remember this is a demo environment. I don't know if someone's going to do that or not, but I just want to show you that you can place an order between the markets. Um, I would sell one, and I'm looking for it to go to zero. So a binary option, binary nature, pretty straightforward. The way I like to, not that I want to equate this to gambling, but we all kind of understand, will the Bears beat the Giants this weekend? Yes or no? That's a binary proposition. Here, will gold finish higher than a certain price? It's a binary proposition. And the price that I'm trading is, at that moment in time, the probability that the statement will be true. So right now they're saying it's, there's only a 31% chance that it will finish higher. I'm trying to sell one. And if I sold one, I know how much I can make. I also know how much I have at risk and what I could potentially lose. Now, the interesting thing about these products is just because I trade one does not mean I have to wait until settlement to see what happens. I could always trade out of it. If I sold one of these at 34 and the probability went down to 10, I could always buy it back and make what would that be? A $24 profit. 34 and 10 would be a $24 profit. I don't have to wait. On the flip side, if I sold this at 34 and it went to 50, okay, so gold rallies right to 1810.50. Now there's a 50-50 chance that it's going to settle higher, and I decide I'm wrong. I sold one at 34, it's now 50. I don't have to risk it all. I can say I made a mistake, and maybe I buy it back for 50 and I just lose $16. So you don't have to recognize your maximum loss or your maximum profit. You can always choose to trade out early, change your opinion, go the other direction. You can do whatever you want. You don't have to wait till settlement. Just because there's an expiration associated with the contract does not mean you have to wait until expiration to see what happens. Now, I want to go through to really drive home how these probabilities move. I mean, gold isn't moving around a lot, so these prices aren't changing a lot, and this doesn't settle for a day and an hour. By the way, I do like to point off on our new platform, you can tear off your charts and you can tear off tickets. So if you've got multiple screens, you can have multiple charts open with multiple order tickets, and you can be monitoring multiple markets concurrently. All right, so it is nice that you do have that. You can set the platform, you can set up your trading screens and your screen real estate however you like to see it. Now, just for fun, I am going to go ahead and go into a 5-minute contract. All right, there's 4. This is perfect timing on this. I'm going to pick the euro US dollar. I'm going to pick the at the money. Let's go ahead and hide this. Let's make this a 1-day chart. Let's set this to 1 minute. I'm going to bring this in, and we're going to We're going to zoom this in on where we are. Okay, now remember I mentioned this is probabilities. Okay, uh, will the euro finish higher than 113.01? Yes or no? Now look at, we're ticking higher. We're going higher. We're going higher. You know, I'm going to actually just go ahead and try to buy one right now. Nope, I tried to place it at 43. I bought one. Okay, good. So I just wanted you to see, I bought one at 43. Fine, it's coming back in my face. Oops. I risked $43 to potentially make 57. And what was I trading? I just did this again, not a buy or sell recommendation. I was thinking, is it going to finish higher than 113.03 in the next 3 minutes and 42 seconds? Now it was ticking higher. Now the probability when I bought one, I paid a 43% probability. As time goes on, notice how the price, we're below 113.03. It's going down. I might have made a bad choice. Maybe I want to get out of this. There's 3 minutes to go. It's ticking lower. Do I want to lose all $43? Maybe not. Maybe I want to sit here and wait. It's kind of like watching a horse race a little bit. Notice how as it moves away from here, this 113.01 was getting close to 50.50. Now it's above, since it's currently higher. Oh, look at this. Watch. If it starts ticking down, the probability of this being true decreases. I'm going to go ahead and get out of mine, and let's just make it a market order and sell it. Okay, I'm out. I didn't want to take all my losses. In fact, I'm going to go ahead and sell one of these because I think it's going to keep going lower. Now, again, not a buy or sell recommendation. Now, if we look at my gold actually traded right there. Isn't that funny? I am now short the 113. I sold this one at 30. Okay, and there's only 2.5 minutes to go here. I'm going to wait and see if this stays below 113.01, I'm going to make my $33 back, part of what I lost on this trade up here that I bought. I changed my mind. Notice how the probability of these things move very quickly as the price of the underlying moves and as you get closer and closer to settlement. Now, I'm short one of these. Do I want to buy it back as it trades a little lower? Maybe not. Maybe I'll just go ahead and let that one go, although because it keeps trading lower. This one here that was just 50-50, down below 40%. Oh, it's ticking back. Could it? And this is what a lot of people like in binary options. They like that price action. It is very volatile. The probabilities of any one of these being true or not changes very quickly as the price of the underlying moves and as time moves. This has only got 1 minute and 14 seconds to go. Now, again, I sold one of these. Maybe I just want to go ahead and take it back. I'm going to go ahead and place my order. And I did make a small profit. Okay. And now I've got no position in this particular product. There's only 58 seconds to go. And I don't know what's going to happen. This will either go to 0 or 100. This will go to 0 or 100. It all depends on where it actually settles in 43 seconds. So if you're looking for price action and you want a lot of price action, binaries could be a great place. These 5-minute euro dollar, the 5-minute foreign exchange ones, you're watching it. Now, when there's 20 seconds to go, by the way, I do want you to see this. You're going to watch the prices go blank. Now, why does that happen? In the last 20 seconds, nobody really knows where this is going to go. Look how quickly this is moving. This 112.97, when we first started looking, was right near 100. And looks like there's 5 seconds to go. It might actually settle at 100. There it is. We just settled. That contract expired. This 112.97 was worth 100. This 112.99 went to 0. Right? And then when it started again, a new 5-minute binary launched, and look at the probabilities now. This one that actually just settled at 100 and went to 100 is now just a 50-50 proposition in the next 5 minutes. That is binary options. And again, we've got, um, and by the way, I know I was kind of talking quickly there, and I apologize. That's kind of the excitement of these. The price movement in these as they approach settlement or expiration becomes fast. It becomes exciting. And you know that each one will either go to a zero, 100% it finished true, or zero, it finished false. And remember, I can trade in and out of these up until about the last 20 seconds when it's just at that point, you kind of are where you are and you wait and see where it's going to finish. If you've got any questions around that, please type them into Sophia. Hopefully she can answer those. But by watching one of these 5-minute binaries go, it really helps you understand, and I'm going to go back to our markets, what you would see in 20-minute or even in our, if I go to the indices and let's go to the S&P 500, I'm going to choose, we've got weekly ones, we've got daily ones, we've got ones that are set out for a 2-hour period. And so you can pick your poison. Do you want, if you're trading indexes, do you want to have something that's going to be a little less crazy, but you got your prediction? What's going to happen at the end of this week? Um, you might not find the right strike that you're looking for. These things do move. In 20 minutes, you're going to have a lot of different choices, and they're going to end in 20 minutes. So you'll have a lot more variety to choose from. And I'm just opening up the chart just so you can see all these 20 minutes in the S&P 500. All right, and you can track these. I'm going to do more on the charts again for technical analysis in a bit, but I wanted to go through binaries. Hopefully, if you've got any questions around binaries, you can ask Sophia, but what you are trading is the probability of this being true, and every one of our binary contracts are worth $100. So the potential profit and the potential loss will always add up to 100. You know exactly what you're getting into before a trade, what you could potentially make and what you could potentially lose. And again, you can trade out of it. You before settlement or before expiration. You do not have to wait. Now let's go ahead and jump over to knockouts. Now, while binary options, it's the probability. With knockouts, it's what's called a delta one product. Let's go ahead and take a look at the indices. And I'm going to pick the S&P 500. For every one of our products, there's always going to be 4 knockouts. And when I say it's a delta one product, what I mean is you're actually trading the price of the underlying. It's a little bit more intuitive than, say, a binary where it's a probability, and you can risk 40 to potentially make 60, or risk 80 to potentially make 20, and it's a probability that's moving around. With knockouts, you're making a speculation on the actual the price of the underlying asset. Okay, so let's take a look. Here's the S&P 500. I'm actually, let's do a daily chart, and let's go to 10 minutes. Why not? And we can take a look at what's happened to the S&P 500 today on this 10-minute chart. I mean, we clearly had a sell-off today, and we're rallied back a little bit. But we can see that it's been a volatile day in the markets. Now, what are you looking at with a knockout? A knockout, since I'm trading the actual price of the underlying, but I'm putting parameters around it to limit my potential risk and my potential profit. And when you click on any one of these blue lines on the left-hand side of the chart, so I'm going to go ahead and click on this one. All right, and I'm going to go ahead and I wanted to do this. I wanted to click up here. Okay. What am I looking at? These are my ceiling and floor of this knockout. So every knockout has a predefined floor and predefined ceiling. And now with the S&P 500, you'll notice that it's a range. It's a 50-point range, and these contracts, instead of being $100 contracts, are $500 contracts. So what am I doing here? If you'll notice the indicative price, it's on the order ticket, 31.27.24. It's also down here, 31.27. So my indicative price is 31.27, and the price 31.27.85. The price that I see from my bids and my offers, the bid ask spread is right around the price. So the price of where I could sell and the price where I can buy are generally going to be right around the indicative price. Now, what am I doing here? If I thought we were going to continue to rally today, so I think we sold off and we've bounced, and I think we might drift a little higher. And actually, this expires in 1 day and 3 hours, so I think maybe we'll finish the week strong. I don't know. Again, not a buy or sell recommendation. I could buy one of these contracts. Now, if I were to pay, let's make this an even number just so the math makes it easier, 31.29. Okay, if I were to pay 31.29 and I've got a floor of 31.14 and a ceiling of 31.64. If I bought one for 31.29 and it went against me and it went down and touched 31.14, which it did earlier today, I would get knocked out of my trade. I bought one, it went lower, I was wrong, I got knocked out. All it has to do is touch 31.14. Now, since I bought it at 31.29 and it went down 15 points, I would lose $150. On the other hand, since I'm speculating that it's going to go higher, if it went up to 31.64 and it touched 31.64, I would get knocked out, this time for a profit since I bought it. So here, if I were to buy one for 31.29, I would be risking a maximum loss of $150. That's it goes down and touches 31.14, or a maximum potential profit of $350 if it went up and touched 31.64, which it was actually at earlier today. So I'm actually looking at the low and the high range for today so far. So if I thought that were going to happen, I'm actually going to go ahead and place an order so we can see what happens. There's my 31.29 bid. I don't know if it's going to trade or not. It may or may not. Again, this is a demo environment. And I did. I bought one. Okay. And you can see that it traded. And in fact, if I go down to my positions tab, not only did I trade that gold contract, in that binary option, I've now bought one of these. I bought it at 31.29. So let's shrink this back down again. So what could potentially happen here? I've got 1 day and 3 hours. If it trades down and touches 31.14, I'm knocked out for my loss. If it trades up to 31.64, I would get knocked out for a profit. And now let's assume that somehow in the next 1 day and 3 hours, it doesn't touch either one of those boundaries. Somehow it stays in between there and never touches one of them. What would happen? Well, I would have a potential profit or loss based upon where it settles. So instead of being an all or nothing, like in binaries, the binary, it's either going to go to 100 or 0, and that's it. It's pretty much an all or nothing proposition. Here, I bought one for 31.29. If in the next day and 3 hours, if it settles up above 31.29, anywhere above 31.29, I will have some type of partial profit. If it goes up to 31.39, okay, and it settles at 31.39, and that's where it settles, I would have $100 profit. It went up 10 points, I would have $100 profit. If it were to settle below 31.29, I would have a partial loss. But I know that if it settles below 31.29, if it touches 31.14, I'm knocked out. I'm out of the trade. It's all over. It's done. We settle it early. I lose my 150. I can choose to do something else. If it doesn't touch it, I can wait and see what happens in a day and 3 hours. If it settles below, I'll have some type of partial loss down to a maximum of 150. If it settles higher than 31.29, I'll have some sort of partial profit up until, if it were to touch 31.64, I would be knocked out. The trade would settle, it would be over, and I would make my maximum $350 profit. So with knockouts, it's sort of like having a stop loss if you're wrong and a profit target built in to each trade. And that's why we offer 4 different ones. You can choose the one that suits what you think is going to happen better. If, for instance, I thought it were going to continue going lower, maybe this the 30.84, 31.34 would be a better choice for me, because if I sold it right now, if it rallied and touched 31.34, I would get knocked out for a trade, for a loss. I'm only risking $44. But if I thought it was going to somehow just keep going lower and that this was let's say a dead cat bounce, um, I could potentially, sell this, and if it went down to 30.84, I could potentially make $456 with only $44 at risk. So we offer whatever your appetite is. Do you want to buy it? Do you want to sell it? Do you think it's going up? Do you think it's going down? And where do you want to put in your risk parameters? How much are you willing to risk? What's your maximum potential loss, and how much are you looking to potentially profit? Again, it'll settle early if it touches one of the boundaries. If it doesn't touch one of the boundaries, when it settles to a price, your potential profit or your potential loss would be the difference between where you bought or sold it and the price that it settled at. So binaries, probabilities. $100 contracts, very small, maximum $100. So you're trading some fraction of $100. You're risking 40 to potentially make 60. You're risking 30 to potentially make 70. Maybe you do a higher probability trade. You're risking 70 just to make 30, but it's a higher probability of success. You can pick your poison. You can choose which time frame you're looking at. You can choose which product you want to do, but it's all probabilities, 0 or 100. Lots of price action when you get closer to settlement. Knockouts, you're taking a directional play and you're actually trading the price of the underlying. And it's pretty intuitive, and you've got your protections built around it. Now, if you were curious because you didn't want to get knocked out of a trade every single time, let's say you thought, let's go back to our example where we thought it was going to rally, and this is where we bought one for 31.29. I think this was the one we chose. This looks right. In fact, I could actually go down here. Which one did I actually choose? Yeah, this is the one. So if I wanted to have something similar, but if it touched 31.14, I didn't want to be knocked out. I still wanted to stay long. That's where our call spreads come into play. I'm just going to mention call spreads because call spreads are very much like knockouts, with the exception being because there is optionality. So this is let's pick one a little lower. Okay. Because there's optionality on a call spread, you would not get knocked out of the trade. So here is the range on this particular call spread where if I wanted to buy it, all right, I bought it if it touches this lower boundary of 31.30. This is the 31.30, 31.70. And notice that's only a 40-point spread, so these are only worth $400. So it's not a $500. The S&P 500 call spread is a $400 contract. I'm not knocked out of the trade. I still have time to be right. And if it were to trade up to the upper level, 31.70, I wouldn't get knocked out for my profit. I would actually have to sell it in order to recognize my profit. Now, here's the catch. Notice that the prices of the call spreads are not right around the indicative price. There is a premium built into it. That is the premium that you would pay for that optionality. Or that you would potentially collect if you sold it. A little bit more like a traditional option. So it's a little bit more complicated. And because of that, people tend to prefer trading knockouts because it is delta one, it's the price of the underlying versus some of the optionality associated with call spreads, although they're similar-ish in nature. And then the binaries, it's these small $100 contracts, and you can simply make your prediction. What's going to happen with the Nasdaq today? What do I think is going to happen with the Nasdaq today? Is it going to be above or below a certain? Here's the 10,672 is right there at the money. It's nearly a 50-50 proposition. Do I want to risk 50 to make 50? And the question then would be, do you think it's going up or do you think it's going down? If I thought it was going up, I'd buy it and I'd be risking 50 to make 50. If I thought it was going down, I would sell it and potentially risk 50 to make 50 the other way. And it is important to note, and I like this, so you don't make mistakes, or that it makes it a little cleaner. On the binaries, we do shade the chart. If I bought one of these, this is where it would need to settle for me to be profitable, where it would go to 100. If I were to sell one of these, this down here is where it would need to settle for it to go to 0 for me to make my profit. And again, I want to remind you, you can always trade out of it early. So if I thought the NASDAQ would keep rallying here, maybe I want to buy an out of the money contract. I would potentially maybe buy one of these for around 30. If I were to buy one of these for around 30, let's just make it 30. I could risk $30. If it actually rallied and settled above here, it would go to 100 and I'd make 70. Now, I could buy it for 30 and it could rally up here and it could go to 50 and I could sell it for a 50-50 then and make $15 and be out of the trade. So with that, hopefully this helped. Oh, you know what? I wanted to show you, before we wrap it up today, let's jump to a chart of the S&P 500. I'm going to choose a weekly chart, and that's fine. I'm going to use the binaries, which is fine. Let's go ahead and use a weekly. Let's pick a binary product for weekly. It doesn't matter. I'm going to hide this. I'm actually even going to hide the order ticket. I'm going to even hide my positions because I want to show you a little on the charts. And this is what's new and different and pretty cool with our charts. Let's go ahead and pick a longer time frame. I'm going to pick a week. Let's go with, let's go with maybe, a week is fine. Let's go with 2-hour chart. Okay, here's a week under 2 hours, and this is the S&P 500. And we've got some weekly contracts up here. I just want to have any chart up here will be sufficient. Okay, so what do we have on our charts? And this is where we've added a lot of functionality. I'm kind of excited about it. I've set a date range. This is the S&P 500. I mean, I picked a binary. It doesn't really particularly matter because our charts would have the prices. But I'm going to look at indicators and drawings. This is where we've gotten a lot more robust functionality. When I click on indicators, we've got a variety. I think there's 37 of them, roughly, of pre-built technical indicators that you can use to populate your chart. If you don't know what any of these indicators are, we do have built-in education information that can help you a little bit. If you want more in depth, you can go to our partner Daily FX. They've got a lot of education up there, particularly around technical indicators. But let's just say I want to put on Bollinger Bands, okay, and it's about statistical moves based around a moving average. I'm going to click on Bollinger Bands, and it will populate my chart with the Bollinger Bands. If I wanted to customize any of the parameters, because our standard default 20 periods with 2 standard deviations and how it's displayed, you can choose to customize it however you like. Okay, and we do have a variety of indicators up here that you can use to customize your charts how you like to look at them. We've even got, and I just turned Bollinger Bands off, some drawing tools. And when I look at drawing tools, it's a way for you to look at, a lot of people like to look at what trends are happening, where you see potential support, where you see potential resistance, and that can help you make some of your trading decisions. If I wanted to do, say, a channel, we could see that it's actually had rallied. We've been in a rally for the last couple of weeks, and let's just pick I'm going to fit a channel here. So I'm going to start my lower left-hand corner and just kind of look. I'm just eyeballing it here. And since we're in an uptrend, I started in the lower left-hand corner and I went to the upper right-hand corner when I click, and then I can build my little channel however I see fit. And then I clicked again, and we kind of have, here's a little channel that I saw. We're in an uptrend, and maybe when it hit the upper end of the channel, it was a selling opportunity. When it got near the lower end of the channel, it was potentially a buying opportunity. And then when it broke through, that can actually become support and resistance level on, all the way around. So now that we just broke through that, if we were to rally again over time, you might tend to see this bottom level of the channel be your resistance to the upside. That's a channel. Again, not buy, sell, or hold recommendation. Let's delete that drawing. Other people like to use mathematical equations, and I could put a horizontal line in here if I want to put my own support and resistance levels. You can customize this pretty much any way you want. You can build your own trend lines. Fibonacci, right? A mathematical ratio that you see in nature. People tend to look for these in the markets. If I click on Fibonacci retracement, again, we're in an uptrend, so I'm going to start in the lower left-hand corner, draw it to the upper right-hand corner, and when I do that, you can see the mathematical Fibonacci levels on the chart where you would potentially see support and resistance levels. And because other people are looking at this, when we were down and we rallied up, this did become a resistance level. Right? And then when it broke through, it pretty much went almost to the next level, and it hovered there until it went to it is really rather amazing how the different levels of support and resistance fit, because there's a lot of people who are looking at Fibonacci retracement. I guess it's a matter of your time frame, and then eventually this level became its resistance, but then when it eventually broke through that level as time went, that became its support level. And these Fibonacci levels tend to be support and resistance at certain mathematical movements. So again, the point here being not buy, sell, or hold recommendation, but that we've got these incredible tools, whether they're drawing tools or indicators, technical indicators, that you can use to populate your chart. And then you can choose to use that as you do your analysis on different, whether it's binaries or knockouts or call spreads, on where you would potentially want to enter or exit a trade. I know we went a little longer today than I normally do, but there was a lot to cover. Hopefully you've been engaging with Sophia in the background. It looks like there were quite a few questions, and I'm really glad you guys took advantage of that. It looks like she answered most of them. Again, this session was recorded, so you'll be able to play it back at your leisure and go through it again, either on our YouTube channel. I would encourage you to subscribe, or on our website in the webinar section, and you can see what's coming up as well. And I do also want to encourage you that, let me bring this up one more time. Oh, you know what? I think it's going to be better if I do it this way. I might as well go to our website, and on our website, we do have this contact us. Here is our contact information. You can also use the chat in the lower right-hand corner. Please, we are here to help you. We do better when you do better. We want you to be successful. So again, whatever we can do to be helping you out. Thank you so much for joining us today. Hopefully you'll join us for other sessions. And I want to wish everyone good luck in the markets and stay safe out there. Crazy times. Thanks, everyone.